Jared Woodard is here. He's head of the Research Investment Committee and ETF strategy at Bank of America Securities. Jared, welcome. You want to go up against Tepper like that?
Hey, Kelly, it's good to be with you. Look, I think there's always opportunities in the market, and our view today is that whether it's monetary easing in the United States or easier policy in China, these can be incredibly powerful in the very short term, but probably aren't the number one place to commit capital today for anyone who's looking for big returns on a 6 or 12-month time frame or longer.
I was sort of took note, and I'm sure you did as well, that Stanley Druckenmiller remains, I don't know if you'd say bearish, but not excited about the possibilities in Chinese stocks. He said until there's a leadership change with Xi Jinping, and I'm sure many people share that view.
I think it's also about the broader economy in China. This stimulus package is, of course, a positive, but our economists in China, our strategists at Bank of America, and other colleagues, investors we speak to all have the same view, which is that the fundamental economic challenges faced by the Chinese economy are not resolved by these stimulus measures. If you don't have a robust consumer base, and you're exporting, with the most growth toward other emerging markets, that's not been the kind of recipe for incredible dynamism for Chinese equities. And I think that's worth noting. It was not that long ago, just last month, that Chinese government bonds hit an all-time low, record 2.0% yield. The government was, I think policymakers were pretty stressed out about this. You could interpret some of this stimulus, I think, as an effort to divert flows of capital away from the bond market, from deflation toward the stock market. And we don't have the view that this is the kind of fiscal bazooka, as it were, that would give you multi-month, multi-quarter sustained economic growth, beyond the trend level. So
are you in it anywhere for a trade, or are you really on the sidelines here?
Well, I appreciate the comments from Dominic earlier. When you have markets that are closed or illiquid, or where you don't have the kind of transparency in data, accounting data, earnings data, et cetera, that investors in the United States might be used to, I think it makes those trades even riskier than they already are. There's a lot of ways to benefit if you see sustained economic growth in China, or even earnings from their companies in terms of orders around the world. I think that those second-order derivative investments, whether it is in Australia or Latin America or commodities, might be a better way to play any upside that does happen without requiring the kind of challenges that sometimes happen when investors overseas try to get active in mainland Chinese equities.
Yeah, no, that makes a lot of sense. You're looking elsewhere as well for, kind of areas of the markets that have actually outpaced the triple Qs this year, you think still have upside, and they range everything from national defense stocks to U.S. industrial renewal plays, nuclear power kind of fitting in with that, and then you're still bullish on Japan.
That's right. I mean, everyone has artificial intelligence on the brain, but I think it might be interesting news that all of those trades you just mentioned, those have been big bullish positions of ours for a while, have actually outperformed the growth stocks this year. Most portfolios are weighted something like 70% toward growth equities, but we see better opportunities elsewhere. In Japan, for example, you've had massive corporate reform. When I was speaking at our Japan conference last month, it was interesting how many investors think that we're still only in the third or fourth inning of those big reforms. You're seeing record buybacks, record capex among Japanese companies, and on our estimate, there's something like 33% of GDP still locked up in cash on corporate balance sheets in Japan. As those reforms work through, I think you can expect much more structural upside in those equities, much more productivity and earnings potential in that market.
Yeah, we showed the other ways you like to play these. But again, Japan was kind of preceded China in many of the measures that China's now taking to try to boost its stock market as well. So with perhaps a little bit brighter story to tell in the long run. Jared, we'll leave it there for now. Thanks for joining us today.
Thanks, Kelly.
Jared Woodard with BofA Securities.